Hey guys, Forex from BK Force. Welcome to our weekly technicals for 8/19, 8/24, 13 Topsy Turvy week, which indeed it really was. As always, trading Forex on margin carries a high level of risk and not suitable for all investors. I ask you to read this disclaimer very carefully to understand all that is associated with trading on margin and seek advice from an independent financial advisor if you have any doubts. Well, despite the fact that it was a really wild week that tested the upper and lower end of the ranges, we still remain very much within the containment of the range, especially in the euro dollar, where 34 still rules to the top side. 32 was the spike bottom here, which kind of bounced off the support that was here a little bit below 32 earlier. And the flame out here at around 33.80 suggests possibly that maybe the 34 could be a little bit too much for the euro to overcome for the near term. Clearly, though, this is a major area. If we can bust through here, basically, if we can take 32.20, 32.15, excuse me, 34.20, 34.15, it opens up this whole run of 35, 36. It would be a major anti-dollar move, perhaps driven by the idea that, hey, there's no Fed tapering, there is nothing on the horizon, and we get a big burst of activity through this particular level. For the time being, this kind of hesitation right in front of these levels suggests that the bulls are certainly gearing up for this run. The bears are starting to trying to hold off with all their might at these particular levels. To the downside, 32 is the near-term support. That's pretty much the range, 34, 32 in the euro. And we traveled pretty much most of it yesterday from low end to high end. And today just could not quite follow through, although the retrace back today is not really significantly bearish. It's just sort of a natural pause here. But still, the fact that 34 cannot be taken out has to be respected. If you're trading range, the near-term risk, obviously, sort of the small risk here, is to simply sell the highs and see if you could if this breakout fails. The breakout trade has to wait until we clear all these levels, because until these levels are cleared, it's going to be a very tough slog here for the euro to try to move it through. To the downside, like I said, 32 is a near-term support, and then, of course, you have the potential, if it really breaks down, to test 31, which is the support here over the next couple of days. So we'll see how the euro develops, but it's certainly within striking distance of really some serious moves here that could potentially change the landscape. Yen, on the other hand, big reversal, sort of a shooting star trade yesterday that today had a small amount of retrace. 97 found some support. And that's kind of interesting because it basically suggests that's obviously because U.S. yields started to percolate, and the fact that U.S. yields are starting to rise a little bit is definitely keeping a little bit of support to dollar yen. But on the other hand, the negative risk aversion flow is keeping a lid on any kind of a serious move. We don't have this kind of virtuous cycle that we had earlier, where you have positive equities and dilution from the Japanese side and anticipation of U.S. Fed tapering, all combining for a really powerful move. What we have here right now is kind of a slow churn and burn that still, on a technical basis, looks very negative, because you have a series of lower highs, cascading lower highs, and really the negative bias in dollar yen doesn't really get altered until we can clear 98.50. Basically, if we can crawl our way back into the 99s, if basically 99 gets taken, that would create a higher low and suggest a much more bullish structure and a potential here for a full onslaught towards the 101 level. But until that happens, it still looks more like a sell the rallies trade rather than buy the dips trade, even though it is impressive the fact that 97 did hold here, and the next couple of days should tell us exactly how the play trades out on this particular pair. Cable just consolidating, very similar trade to the euro, sort of just hanging around this 56 level. 57 is, of course, the near-term high, kind of just like with the euro, with 34 is in sight, but still operating as a dominant resistance level, and certainly worth watching. Cable has a lot of positive echo data behind it, so the retrace here could be a little bit shallow, but don't count out the possibility that if you start to have a correction, the corrections in cable tend to be very severe. So I think if 56 goes, it really could put 55 into play, just on a corrected basis, on a momentum basis, if we start to fail. Because once cable fails, they'll start to just jump on it and try to push it down as the week proceeds. So on the other hand, a trade above this level over here is about 57.50, I guess, 57.50. I still think it's really tough to clear this without some sort of a battle in the resistance. So for those who are trading range, you may want to just take a punt these levels here obviously present a relatively defined risk here for cable on a longer term basis, so worth watching as a potential turn trade here. And Aussie has held tough, actually held much better than almost everybody else today, which is in a complete reversal of yesterday. A lot of the Aussie cross flows just started to really unwind today. But still, this 92 kind of caps it. Next week should be interesting to see if the commodity push and everything else can kind of bust us through. Now, if Aussie clears the 93, it would have then created a very, very classic inverse head and shoulders, a very, very nice bottom, and a potential here for a run all the way out to 95s. But that's a big if. You have to watch this very carefully. For now, it still continues to base, and still not really a clear definitive buy until it can overcome this very, very significant resistance around 93s, because look at this chop of 93s that it overhangs on. But it's definitely looking better, and I would say that on the flip side, got to my head, the path of least resistance here is now higher rather than lower as we maintain our position here, and the highs. We have a series of higher lows, which certainly bodes well for Aussie as we go forward. The other calm dollars, Kiwi broke out through 81s right here. This is, I mean, it's really like this, this 81 critical level. This, I'm sure, Kiwi starts to climb through 81.50. You're going to start to hear a lot of rhetoric from the RBNZ, but on a technical basis, that's a pretty bullish look here. We sort of were at the upper end of the range. If we can bust out through this range, that really opens up this whole corridor all the way out effectively to 84, 85. So need to watch out for a sharp pierce here if it can happen. On the other hand, it's also very, as it always happens within the range-based trades, it's a very low-risk short here because we know that the ranges are defined. You could even probably risk all the way to 81.75 just to give yourself more room. And if you guess the top, then this obviously becomes a very interesting trade and a move back down to the 80 to the bottom. 80 is the near-term support here for a little bit of a corrective move. And 81.50, really 81.75, puts us square up into this, bust out breakout mode as the calm dollars come back roaring to life. Now, Caddy, on the other hand, not really cooperating and not really doing nearly as well as the Asian calm dollars. It's sort of trapped in this 102.50, 104 range, and 102.50 is just stone cold support. It's just very, very hard to pierce this, and it doesn't seem to be generating enough juice to break down to the downside. And partly maybe a function of the fact that the dollar is weak and the Canadian dollar is just getting the brunt of dollar weakness. I mean, one of the more interesting trades, where's my thing, is reversing this whole sell Asia, buy North America. It seems now that the trade is buy Asia, sell North America with Aussie CAD, and that seems to be kind of an interesting move as well. So this bust through 93s in Aussie also correlates well with a bust through 95s in Aussie CAD, and that maybe another interesting way to try to trade the breakout in Australian dollar if we do get one to the upside. And last but not least, I want to just take a look at the European crosses. Euro pound had a very, very big correction. This is all basically pound strength, but we're now right back to this very serious support at 85, basically 8,500. And I think it's worth watching because this support starts to hold and we start to trickle back up. It would suggest that at least a medium-term retrace all the way to 86, 86.50. If, however, this 85 level is given and we start to break below, that would suggest a much more interesting possibility that we could have a move all the way out to 84. So this would really be a very, very strong cable move. But for now, most of the strength of the cable move has already taken place, and we need to see if they can break the 84.50s to really, or 8,500s really initially, and then target 84.50 as the next target on the euro pound cross. So that's how the next week shapes up. All of the volatility this week certainly puts us in some interesting positions across all the currency pairs. Most importantly, I think most interestingly will be the euro at the 34s and dollar yen, whether it can hold the 97s for the time being. Wishing you guys the best of luck and the best of trade. And of course, sorry, don't forget, Aussie battling 92.93 breakout could really, really turn itself around as a potential trade up. So watch all those currency pairs next week. Have a great weekend, and I'll see you guys next week. This is Boris Lotsberg for BK Forex.